We've already covered a lot in this module. In this final lesson, I'm going to introduce a fundamental concept: support and resistance.
I've honestly never heard of support and resistance before. Does it have anything to do with charts and candlestick patterns?
Kind of. We will definitely need a chart, but it doesn't have to be a candlestick one. You can actually identify support and resistance on most chart types.
But why do I need to know about support and resistance?
Well, understanding the concept of support and resistance is a foundation of technical analysis. Also, knowing the reasons why support and resistance forms is essential if you are contemplating becoming a good technical trader. Remember, earlier in this module, when we were introducing technical analysis, we discussed the idea that if loads of traders are looking at the same patterns, they become self-fulfilling.
Sure, yes. It was a bit difficult to get my head around, but I understand it now.
Well, support and resistance is exactly that in practice. The concept is used by traders to identify price levels that could potentially act as an obstacle and prevent the price from getting pushed in a certain direction. These are psychological levels in the market because lots of other market participants have identified it as a level. It becomes one and gains more strength over time. We are trying to work out where we think these levels might be and therefore what might happen in the future should the price get to these levels again.
Well, that sounds good to me. Let's get started with the basics.
Yep, I'm looking forward to getting stuck into this one.
The essential concept of support and resistance is actually very simple. We are talking about the levels in the market that are preventing the price from moving higher. That's resistance. And the levels that keep the price from going lower, that's support.
Can you show me the concept at work in a real market, please? I think that might help.
Sure. Okay. So, in this example, we are looking at the price of gold. Let's look at a simple resistance level. So, here the price has risen. We touched on what happens in bullish trends earlier in the module. Buyers are happy paying a higher price for the security, and sellers are asking for an ever-increasing price until it hits resistance zone here. At this point, just below 1,300, buyers aren't happy paying anymore, and the sellers have eased off asking for a higher price. As the chart develops, you can see that this level was challenged again and again. Buyers are refusing to pay any more.
Right, I see what you mean. So if the price returns to that point again at some point in the future, because we've identified it as being a resistant level, we can expect some pushback from buyers being asked to pay more.
Yes, in a nutshell, this is what resistance looks like.
Why are they refusing to pay more?
Well, from a technical trader's point of view, and this is a fundamental aspect of technical analysis, we don't know why. We just know that there is resistance to paying more. To answer the why question, we would need to go beyond technical analysis and use fundamental analysis.
And what about support? Is this when the price is falling?
Support is the opposite of resistance. It's when there is a psychological level that prevents the price from falling further. When a price is falling, bulls are on the back foot, and the bears are pushing them to accept a lower price. There comes a level at which this imbalance stops and the price stops falling. This is support.
Good. This is all making sense.
Wait a minute. Does that mean that the price can't go any lower when it hits support? Or any higher when it hits resistance? That doesn't make sense.
We are not saying that. It can certainly move higher and break through resistance or fall through support. In this type of analysis, it's not black and white. Support and resistance is subjective. And all we are trying to do is identify areas where the probabilities are in our favor.
So is it possible that one trader might see things differently to another?
Absolutely, that's entirely possible. You might have traders looking at it in different chart types, different time frames, or you might even have traders who aren't looking at it at all.
In the last example, I noticed that you called the resistance level a zone. Is that because it's subjective?
Yeah, that's exactly why. We might talk about a resistance zone or a range instead of a precise price.
So, we shouldn't be too concerned if it goes slightly over?
No, it's testing resistance. Try to see the bigger picture. The price is testing this area.
I like it when things are certain, but accept that there's subjectivity in this type of analysis. Is there anything we can do to at least help us get more certainty?
Yes, there is actually. When we identify these levels, we do so with a varying degrees of confidence.
Great, how can I do this?
The more a support or resistance area is tested by the market and holds, the stronger it becomes. Going back to our resistance example, think about what's happening here. Collectively, the buyers are refusing to pay a higher price. Each time they refuse, our conviction that this is an important level increases. It's natural human behavior. Strong areas are referred to as being confirmed, and we give them more weight in our analysis.
Okay, I get it. And because other traders are looking at it, it becomes more of a significant level.
Yeah, you've got it. And it becomes self-fulfilling. More and more traders now see this level that's difficult to pass, therefore making it harder to break through.
But what happens if the price goes above the resistance level? Does it become irrelevant?
No. If the price moves above a resistance level, that level becomes a potential support level, albeit a weak one until it gets tested. Think of it in this way. Imagine support levels as a floor and resistance as a ceiling. If the price goes through the ceiling, it becomes the new floor beneath you.
Okay, I see. So that means if you break through a resistance level, it becomes a support.
Okay, but what if you fall through the floor?
Well, if the price loses support and sends you crushing through the floor and you land in the basement, the old floor becomes your new ceiling.
Right, so it's a new resistance.
That's the basic idea, yes.
Okay, good. I think I understand the basics of support and resistance now.